Hello, good afternoon. Today I'm Andeerson Wong. Today I'd like to talk about Forex for international company as well as for the import-export company. As you know, a lot of companies suffer a lot of losses in foreign exchange gain and loss. If you see the P&L for a company financial reports, you can see there's a big losses for a lot of company in foreign exchange gain and loss. Maybe they make a good return, good sales, good profits. Maybe the foreign exchange gain and loss, they will suffer about 10 to 20% or more because Malaysia ringgit is floating. Sometimes it's weak, sometimes it's strong. So how we can save or the profit taking back from overseas? There's a plan, there's a workshop to carry out for a lot of accountants, CFO or CEO of the company to understand how to handle the foreign exchange gain and loss. This is my course available in Kuala Lumpur. Time to time is very private. Is sometimes I go to a company to give a talk, or sometimes it's a private talk. Let's say they have few people, maybe 10 or 30 people, from maybe 3 person from one company come and listen to the talk. Of course, there's a paid cost, yeah? But however, this is a inquiry that I receive a lot of them from international company, import-export company like palm oil company, logistic company, where they're selling like AirAsia. They're selling a lot of tickets in foreign currency. All right, so how they can accumulate the profit in one center, one currency, and on the right time they put back the currency back to Malaysia, or they park certain portion of the profit in overseas account, foreign currency account, either in US dollars, Sing dollars, or Australian dollar, whatever currency they prefer. Of course, there's a strategy behind, so that is why I give course, a one-day course to a company. So hopefully a lot of people who are like to know how to save the losses or gain in to certain extent for foreign currency exchange can attend the course and contact me. Maybe can like my video or share my video, so we can keep on to give you updates when the course dates and time and where is it. So I hope a lot of companies will benefit from the gain or save a lot of money in the foreign exchange gain and loss account. So thank you so much. I will keep you update if any course available. Right, thank you. Hello ladies and gentlemen, now we go back to understand the dollar index chart. This is H4 dollar index chart, and this is from last year November 7. You can see after November 7 there's a lot of volatility. What I mean by that, all right, take a look. So before that there's a volatility as well, you can see, but not much compared to after this cutoff. This is still a moving for dollar index, all up all the time, retrace, up all the time, retrace. But here is a little bit different. The movement, there's no direction on dollar index market. All right, it go up, come down, but this is the starting point. This is a warm-up period. This is a starting point. You see, it gap up, gap down so much. How much? Let us take a look. This is 97.37, move to 96 point, about 0.4. 0.4 point in dollar index is considered huge, volatile. So this is a warm-up period. So on January onward, you can see the market is volatile. So we zoom into H1 and we take a serious look. All right, take a look. This is dollar index market on March. It moved off, it's sideways the whole day. This is March 5 and March 6, March 16. Suddenly it dropped so much, so fast. All right, then it goes sideways again, drop again, so fast, but it bounced back tomorrow. But on the same day, it will scare you out. This is how good the market maker. That is why I teach price movement analysis and market maker psychology. What's the meaning of this? You must understand. It go up and come down to do a trace and go up again. So you can see one sharp movement, second sharp movement, third sharp movement, and this is a little bit stable. Yeah, stable. This is again happen, again happen, again happen, again happen. again happen again. This is the what we cannot handle previously, and now more and more difficult to handle dollar index. So how it relate to your Euro USD? Take a look. This is your H1. All right, so we go back to March as well. So we take a H4. H4, you can see same thing. That is what I mean. It moved sideways, sharp fall, one sharp movement, second, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. This is a big one, very big. Yeah, as big as this. You can see the line 14, 15, 16, 17, 18, 19, 20, 21, and so forth, 22. So this is how the dollar index affect the financial market, especially for this pair Euro USD, because that's why I keep on saying the dollar index is a must understands tools for forex trader if you trade related to dollar pair. So dollar index is a key component in your trading strategy. If you don't understand dollar index, then your dollar index effect that affect your currency pair like dollar Euro USD, you will suffer a lot. All right, so let us go back to take a look on H4. How about H1? This is the example. Let us take a look. You do a sell here, example, and suddenly it go up 1 day, 2 day, 3 day, 4 day, 5 day, 6 day. This 6 day you will suffer a floating loss. You don't know you come down. All right, so these 6 days you suffer a lot of emotional effect. You suffer from don't have much confidence because you sell over here and this is a floating loss. If your account is sustainable, then you are alright, but your account is not sustainable and the floating loss keep on increase and your margin call is there. You only have few solutions. Either you cut loss, either you add in more margin, more deposits, and hold the shorts. But this is not a good trade, right? So if you move in further to M15 or M30, how to handle this? Right? This is Euro USD based on M15, and currently it's moving up here. So what is the intention on the market today or this coming week is moving upward, but there's not much direction. It was go back to 1.1250 level, but suffer will be maintained over there, and from there they will find a new directions 1.1250. all right, so the problem that with dollar index is how a lot of traders can handle this movement. It go up, suddenly pump, come down so much. The falling is about 76 pip. 76 pip is big movement in financial market, especially Euro USD. That's why dollar index is a key component to understand. All right, so I would like to tell everybody patience and making a good move to your dollar index, especially for the import-export company. Dollar index is a must look chart because it affects the strength of the dollar and it directly affects the strength of the ringgit. All right, so if the dollar getting stronger, the Malaysia ringgit can be moving from 4.1213 to 4.161718 or maybe 4.20, depend on how strong the dollar is moving forward. This is how a lot of corporate, they don't understand the dollar index and how to read the dollar index properly, and that is why they cannot understand how to manage their foreign currency gain and loss. So in my course for company, we call basic class for corporate, there is a class in Kuala Lumpur. I will carry out the class for public, one class every 2 months or something like that based on the demand. But most of the company is asking me to go to their company to give a lecture or course to teach them how to understand this dollar index as well as handling of Malaysia ringgit, so they can save a lot of money in foreign exchange gain and loss. Thank you and have a nice day.